Welcome and thank you for joining me for the June 2026 Booze Compass Monthly Briefing. Executive Summary. June 2026 marked a pivotal month for the global beverage alcohol industry as structural headwinds intensified across nearly every segment, prompting aggressive strategic repositioning by major players. Consolidation activity accelerated in both upstream production and downstream distribution, driven by persistent volume declines, margin pressure, and the urgent need to capture growth pockets in ready-to-drink cocktails, non-alcoholic alternatives, and premium segments. The month witnessed significant realignment in three-tier distribution architecture, major portfolio rationalization by multinational producers, and a wave of closures among marginal craft brewers and independent retailers, all underscoring an industry in the throes of fundamental transformation. Simultaneously, the industry's growth narrative bifurcated sharply along consumer income and occasion lines. While traditional beer and wine categories contracted, U.S. beer volumes fell 5.3% over 12 weeks, and wine consumption extended a four-year slide to 15% below 2019 levels. Spirits-based RTDs surged past $3.8 billion in off-premise sales with 16.4% growth, and non-alcoholic wine expanded 12.5% to 1.8 million cases. The FIFA World Cup provided temporary relief with on-premise beer sales rising 5.5% nationwide and bookings tripling in some markets. But underlying structural challenges persisted as only 54% of American adults now consume alcohol versus 67% in 2022. Major spirits houses and brewers responded with aggressive RTD line extensions, zero-proof brand launches, and experiential marketing pivots designed to capture moderation-driven occasions and younger consumers abandoning traditional alcohol formats. Category analysis. Mergers and acquisitions. June 2026 saw transformative consolidation across the beverage alcohol value chain, with three-tier distribution restructuring dominating activity. Reyes Beverage Group completed its acquisition of 11 markets from Republic National Distributing Company, significantly expanding its spirits and wine footprint, while Republic simultaneously announced plans to exit Illinois entirely due to financing constraints and issued warn notices for facility closures. The reshuffling continued at retail as Texas giant Specs Wines, Spirits, and Finer Foods broke out of its home state for the first time by acquiring Nevada's Lee's Discount Liquor, the state's largest independent chain, marking a major consolidation play in Western retail. Moon Distributors separately agreed to purchase RNDC's Arkansas operations through an asset purchase agreement, further fragmenting what had been one of the industry's largest wholesale networks. Production assets changed hands as brewers and distillers responded to category-specific pressures. Firestone Walker and Duvel USA jointly agreed to acquire the Stone Brewing brand from Sapporo USA in a Q2 2026 transaction, rescuing one of craft beer's most recognizable names from international ownership. On the spirit side, Edrington exited the American whiskey category entirely by selling Wyoming Whiskey, which returned to full Wyoming ownership, while DiSerono Group completed its previously announced acquisition of Amaro Averna and Zeta Piras from Campari Group, strengthening its international portfolio in the US, Germany, and Italy. Tilray Brands signed a definitive agreement to sell Atwater Brewery back to former owner Mark Reith, reversing its earlier craft beer acquisition strategy. Smaller-scale deals included Kintsugi Sake's operational takeover of Origami Sake Brewery in Hot Springs, Arkansas, and hop farmer cousins Shelley and Eric Damaris, purchasing majority control of Icicle Brewing in Leavenworth, Washington. Wine sector M&A reflected both premiumization and portfolio rationalization themes. Canadian producer Andrew Peller agreed to be acquired by a Fairfax financial subsidiary in an all-cash transaction valuing the company at approximately 397 million Canadian dollars equity and 579 million Canadian dollars enterprise value. In Oregon's Willamette Valley, Antica Terra expanded its estate to 484 contiguous acres, the largest in the Eola Amity Hills AVA, by acquiring the 298-acre Wallachia vineyard, though the winery emphasized the move was intended for long-term flexibility and guest experiences rather than significant production increases. Vineyard 29 divested its historic 17.82-acre Ada vineyard in two parcels to longtime associates, while securing multi-year grape purchase agreements to maintain Ada-designated wine production. Bronco Wine Company acquired Resurrection Brands, a wine sales and marketing organization, to expand its national representation capabilities, while the Haskell family, owners of the Blaze Restaurant Group, purchased Lincolnville's Cellar Door Winery for $1.8 million, with plans to add lodging, a brewery, restaurants, and co-packing infrastructure. Meanwhile, merger talks between Henkel Freixenet and Maison Pommeret advanced toward a potential majority stake transaction in the Champagne House, and Soul & Spirits Brewery acquired the Memphis-made brewing brand and IP at a June 3rd bankruptcy auction, planning to continue production of Fireside Amber Ale even as equipment was sold separately. Financial developments. Financial results across the industry painted a sobering picture of demand contraction and margin erosion. Diageo's first-half performance showed a 4% decline in net sales and a 2.5% drop in profits, missing analyst expectations and prompting the company to halve its dividend while announcing plans to broaden its portfolio for higher growth and seek greater financial flexibility. Weak performance in the US and China drove the shortfall, leading Diageo to propose approximately 150 job cuts in Ireland as part of broader restructuring. Brown-Forman reported flat full-year sales of $3.9 billion for fiscal 2026, ending April 30th, with operating income down 2%, and warned of continued flat revenue growth ahead, despite a stronger-than-expected fourth quarter that saw net sales rise 2% to $912 million. The company paused production at its Slane Irish whiskey distillery in Ireland, citing softer whiskey demand and shifting consumer preferences, underscoring the category headwinds facing aged spirits producers. Edrington posted sales of $1.1 billion for its fiscal year ending March 2026, with the Macallan 12-year-old single malt contributing significantly to performance as the company maintained its premiumization and portfolio expansion strategy. Treasury Wine Estates unveiled a multi-year U.S. restructuring plan, including vineyard exits, winery sales in Paso Robles and San Luis Obispo, and production consolidation in St. Helena, as part of a transformation agenda to refocus from 76 brands to approximately 30 core labels. The company emphasized the need to better address fast-changing consumer trends and reignite growth amid persistent volume declines. Constellation Brands announced it would report first quarter fiscal 2027 results for the period ended May 31st, 2026, on June 30th, with a July 1st conference call scheduled, while Monster Beverage authorized an additional $500 million share repurchase program, signaling confidence despite broader category challenges. A wave of brewery and distillery closures underscored the financial distress among smaller operators. Zipline Brewing Company in Lincoln, Nebraska, abruptly announced the immediate closure of its tap room and beer lounge and the end of all brewing operations, citing inflation and rising expenses. Bold City Brewery closed its downtown Jacksonville tavern on June 27th due to lease expiration, though its production facility remained operational. Five Churches Brewing in New Britain, Connecticut, permanently closed after 8 years, with owners citing the financial burden of rebuilding. Academia Brewing in Athens, Georgia, announced permanent closure after nearly a decade, pointing to mounting financial pressures and shifting market conditions. In Australia, Six String Brewing appointed an external administrator to facilitate financial restructuring, while beverage company Lion proposed closing James Boag's Brewery in Launceston, Tasmania, by November 2026, impacting 42 roles amid long-term demand declines and cost inflation. Line 51 Brewing in Oakland set July 19, 2026 as its final service day. Mordecai Beverage Company in Raleigh announced closure after 6 years, and Quaff On Brewing in Nashville, Indiana, transitioned beer production to Sun King Brewery while closing its own facility. Even established operations face strain. Whiskey House of Kentucky announced a 30% workforce reduction to align with production capacity, and Uncle Nearest Premium Whiskey's court-appointed receiver signed a non-binding letter of intent to sell nearly all brand assets to a confidential African-American-led investment firm. Market trends. The most pronounced trend in June 2026 was the explosive growth of spirits-based, ready-to-drink cocktails, juxtaposed against persistent contraction in traditional beer and wine segments. RTD cocktails reached $3.8 billion in U.S. off-premise sales in 2025, up 16.4% year over year, according to the Distilled Spirits Council, even as total U.S. spirits volume edged down approximately 2%. The category surged again to start June 2026, per NIQ weekly scans, with spirits-based RTDs increasing 31.1% in dollar share of total U.S. beverage alcohol in April 2026 versus the prior year. Industry observers characterize the environment as a classic seller's market for scaled RTD brands, with favorable conditions encouraging founder exits and M&A activity. Simple flavor combinations like vodka and iced tea led growth, while the RTD segment approached 80 million cases nationally, having grown by over 10 million cases in 2025 alone. Consumer participation in alcohol consumption fell to historic lows, even as certain premium and alternative segments expanded. Latest figures showed only 54% of American adults now consume alcohol, down sharply from 67% in 2022. Yet the U.S. alcoholic beverages market reached $543 billion in value in 2026. This divergence reflected bifurcated demand. Affluent consumers continued trading up for premium, limited edition, and experiential offerings, while middle-income drinkers shifted to value formats, at-home occasions, and pre-drinking strategies. Non-alcoholic wine grew an estimated 12.5% to 1.8 million cases in 2025, according to Impact Databank, spawning a host of new competitors, including extensions from established brands like Josh Cellars, Butter, and Reunite. Globally, IWSR data revealed spirits volumes overtook wine for the first time since records began in 1990, marking a historic crossover driven by RTD cocktails, no/low alcohol innovation, and new consumption occasions in emerging markets like India and Turkey. China's beverage alcohol market underwent structural transformation as younger consumers and on-demand drinking occasions replaced traditional business banquets as key drivers. The shift pressured baijiu, while imported white spirits and RTDs experienced growth, reflecting broader Asia-Pacific trends toward casual, convenience-oriented consumption. In contrast, the FIFA World Cup provided a powerful but temporary boost to on-premise beer sales in host markets, with nationwide bar and restaurant beer sales up 5.5%, according to the Beer Institute, and England pub bookings for opening matches jumping 293%. Some U.S. host city bars reported drinking supplies dry and arranging emergency deliveries during the tournament's opening week. However, this event-driven spike masked deeper malaise. U.S. beer volumes fell 5.3% over a 12-week period, per Bernstein analysis. Craft beer continued contracting with dozens of taproom closures in 2025, and Memorial Day sales proved sluggish, signaling potential summer struggles ahead. Wine faced similar headwinds, with U.S. consumption extending a four-year decline to approximately 15% below 2019 levels, prompting producers to chase Gen Z with playful tie-ins to pop culture events like Shark Week, NASCAR, and WWE in efforts to reposition wine as fun and accessible rather than formal and intimidating. Market analysis. Industry analysts in June 2026 emphasized stabilization over growth as the new benchmark for success. The Pro Spirits Report 2026 from ProWine declared that the spirits industry is undergoing a structural shift, where growth now occurs selectively in no/low alcohol, RTDs, and new consumption occasions, rather than across the board. Discus data showed spirits maintained market share leadership over beer and wine in 2025, but with ready-to-drink cocktails emerging as the sole robust growth engine, while traditional brown spirits categories faced headwinds. The IWSR's new 10-year outlook projected 6 more years of global beverage alcohol volume declines before stabilizing around 2031, with consumption shifting toward emerging markets and moderation trends reshaping developed market behavior. The report warned that 2035 will be vastly different for the global drinks sector, requiring companies to fundamentally rethink portfolio, channel, and geographic strategies. Segment-level analysis revealed winners and losers within the broader contraction narrative. Tequila volumes held relatively steady among the top-selling brands globally, though though competition intensified between mainstream labels like Jose Cuervo, which declined despite leading, and premium entrants such as Don Julio and Casamigos. Gin volumes rose 1% globally in 2025, demonstrating category resilience even as growth moderated from prior years. Scotch whisky struggled significantly, with combined volumes among the top 20 brands falling from 69.5 million to 67.4 million cases, and 13 of the top 20 brands posting year-over-year declines. Analysts attributed Scotch's challenges to tariff pressures, elevated costs, and demand softness across key markets. Bourbon and American whiskey showed mixed signals. Premium and ultra-aged expressions attracted collector interest and auction activity. May 2026's top 20 single bottles totaled $1.88 million in hammer prices, the first month in 2026 to top $1 million. While allocation-driven secondary markets showed signs of a great allocation reset, with pricing data suggesting buyers growing more selective and allocation alone no longer guaranteeing appreciation. Fine wine markets exhibited tentative stabilization after prolonged declines. Livex reported that Bordeaux's Fine Wine 50 index rose 0.7%, and U.S. fine wine's share of trading value increased markedly over the past decade, indicating buyer confidence in credentials and quality despite broader category weakness. Renewed demand from China bolstered rare and high-quality wine auctions, with houses like Sotheby's experiencing strong performance driven by mature, drink-ready bottles from Chateau Margaux and Romanée Conti that regularly exceeded expectations. Bordeaux's 2025 En Primeur campaign proved pivotal, with chateaus deploying bundled offers, such as visits tied to case purchases, and wines showing fresher stylistic profiles with lower pH and alcohol, though merchants and buyers remained cautious given uncertain economic conditions. The California wine market entered what Turrentine Brokerage characterized as a new, more nuanced phase of correction, where surface oversupply masked quietly narrowing buying opportunities, creating challenges for wineries seeking to move volume. RTD canned cocktail market forecasts projected the global segment to exceed $60 billion by 2036 at a 4.8% CAGR, with U.S. growth anticipated at 12% CAGR through 2033, driven by premiumization, convenience demand, and regulatory shifts favoring spirits-based innovation. Industry news. The Brewers Association and American Cider Association announced that CiderCon and the Craft Brewers Conference will co-locate in 2027, strengthening collaboration within the craft beverage community. The 2026 Great American Beer Festival competition introduced a new craft malt category for the first time, highlighting contributions from small malt houses to the brewing industry. Samuel Adams Brewing the American Dream awarded Sol Mega the 2026 Brewing and Business Experience-ship, supporting food and beverage entrepreneurs nationwide. Decanter World Wine Awards 2026 revealed record-breaking quality, with nearly 17,000 wines from 58 countries evaluated, resulting in 50 Best in Show, 196 Platinum, 924 Gold, and 6,193 Silver medals, emphasizing emerging regions like Texas, Pico in Portugal, and Valdejalón in Spain alongside traditional powerhouses. The English distillery in Norfolk claimed its second global whiskey title at the World Whiskies Awards 2026, winning World's Best Single Malt, Small Batch, for its gently smoked sherry hogshead expression. Leadership changes and strategic appointments marked organizational shifts across the industry. Henrique Braun was named CEO of the Coca-Cola Company effective March 31, 2026, succeeding James Quincy, who will transition to executive chairman. William Grant & Sons appointed Edrington veteran Igor Boyajian as chief brand officer to lead global marketing. Patrick Piana, managing director Europe at Campari Group, was elected president of Spirits Europe, while Marta Vidal was elected president of the Regulatory Council of the Cava Designation of Origin for a 4-year term. Robert Raymer joined Kaloa Rum Company as chief operating officer. Southern Glazer's Wine and Spirits announced plans to rebrand with a new company name as part of strategic repositioning, while the company separately expanded its distribution agreement with Saint Michel Wine Estates in the Caribbean, Central America, and South America. Infrastructure investments in capacity expansion projects advanced despite broader industry contraction. Anheuser-Busch committed $20 million to upgrade its St. Louis brewery and a Missouri can plant to boost Michelob Ultra production, including equipment upgrades and a new technical skills training center, betting on a beer category rebound. Ametis received key equipment for its $40 million mechanical vapor recompression system at its Keys, California ethanol plant, expected to reduce natural gas usage by approximately 80% and increase annual cash flow by $32 million, while decreasing carbon intensity to enhance Section 45Z clean fuel production tax credit value. The Blind Horse Winery in Kohler, Wisconsin, unveiled a new two-story all-seasons terrace bar expansion, enhancing guest experience and accommodating increased tourism, with new branding, elevated interiors, and a chef-curated menu. Woven, an Edinburgh-based whiskey maker, secured 4 new international distribution partnerships across France, Italy, Spain, and New Zealand, following recognition at the World Whiskies Awards, where its collaborative WXC Spirit was named World's Best Flavored Whiskey 2026. Dogfish Head and Rolling Stone collaborated to create a limited edition 5-year aged American single malt whiskey, blending whiskey and brandy aged in 12 different barrel types, celebrating 250 years of American music. Boston Beer Company settled a non-compete lawsuit with 2 former sales representatives, resolving the dispute over the company's use of restrictive employment agreements. Cross-category insights. The convergence of financial distress and M&A activity in June 2026 revealed an industry undergoing forced portfolio rationalization rather than opportunistic expansion. Treasury Wine Estates' decision to slash its brand count from 76 to approximately 30, while simultaneously divesting California wineries and vineyards, exemplified how margin pressure is compelling producers to retreat to defensible premium positions. Similarly, Brown-Forman's pause of slain distillery production and flat revenue guidance, coupled with Diageo's dividend cut and restructuring announcements, demonstrated that even category leaders face demand headwinds severe enough to trigger significant operational pullbacks. The wave of craft brewery closures, Zipline, Academia, 5 Churches, Bold City's downtown location, and others, occurred in parallel with upstream consolidation like the Stone Brewing acquisition and Tilray's Atwater divestiture, suggesting a bifurcated market where scale and brand equity increasingly determine survival, while undercapitalized independents exit. Republic National Distributing Company's Illinois departure and broader footprint contraction, coinciding with Reyes's aggressive market acquisition, illustrated how 3-tier distribution is consolidating around fewer, larger players capable of managing the complexity and capital requirements of modern beverage alcohol logistics. Product innovation patterns directly mirror the market trend data, with RTD cocktail launches and non-alcoholic line extensions dominating new product activity in response to documented consumer behavior shifts. The simultaneous introduction of Sazerac's 3 canned cocktail brands, Proximo's Cuervo RTDs, Hennessy's Very Special Cocktails, and Svedka Vodka Water reflects producers' recognition that the $3.8 billion spirits-based RTD segment, growing at 16.4% annually, represents the industry's primary volume and margin opportunity as traditional formats decline. The parallel surge in zero-proof innovation, Michelob Ultra Zero, Barrow by Tom Holland, Campari's Crodino Push, Amass electrolyte mixers, Pizzolato non-alcoholic spritz, and Owl's Brew functional mixers, directly addresses the documented drop in adult alcohol participation from 67% to 54%, and the 12.5% growth in non-alcoholic wine. These launches are not experimental line extensions, but strategic hedges against a structural moderation trend that IWSR forecasts will drive 6 more years of global volume declines. The timing and scale of these initiatives suggest major producers view alternative formats as essential to maintaining revenue and distribution relevance as core alcohol consumption contracts. The industry's response to bifurcated consumer demand reveals a sophisticated K-shaped strategy unfolding across price tiers and occasions. At the premium end, Ultra-aged bourbon releases like Four Roses Mizunara Cask Finish, Blade & Bow's 12-year Solera Reserve, and Lost Lantern's United States of Bourbon target collectors and affluent enthusiasts willing to pay for scarcity and craftsmanship, aligning with auction data showing May 2026's top 20 whiskey bottles totaling $1.88 million. Simultaneously, value-focused moves like Molson Coors, reviving Keystone Ice and expanding Miller High Life, combined with the proliferation of accessible RTD formats in transparent pricing, address budget-conscious consumers trading down and shifting to at-home consumption. The World Cup's temporary 5.5% on-premise beer sales boost and 293% England pub booking surge demonstrated that experiential, event-driven occasions still drive premium consumption, explaining why brands like Hennessy explicitly repositioned RTDs for warm weather gatherings, and why Anheuser-Busch deployed a 10-ton combine machine with beer taps for sports events. This dual strategy, premiumize for affluent occasions, simplify and value engineer for everyday consumption, appears to be the industry's answer to maintaining margin dollars as volumes decline and consumer bases fragment along income and lifestyle lines.